Hello and welcome to the Miko Bits show, and I'm your host, Miko Bits. Today we have an exciting episode for you, which is we'll be talking with Ren, and Ren is the creator of the RenVM and RenBTC, and this is a really instrumental project for mapping the value of Bitcoin into the Ethereum space, which is becoming increasingly popular, and it's quite an extraordinary achievement. So before we get into it, this video program is opinion only. It's for information and entertainment purposes. It's not investment advice. So seek a duly licensed professional for that. Before we start, if you're interested in Bitcoin and blockchain, please consider clicking that subscribe button and also click the bell so you can get notifications about future videos that I might post. Thank you. Okay, so without further ado, here's Andrew.
Hi, nice to meet you.
Yeah, welcome. Welcome to the Miko Bits show. So would love just a brief little background on yourself and, how did you get to be involved in blockchain and then more recently into Ren project?
Yeah, sure thing. I guess I first kind of found out about Bitcoin in 2013. I think I made a run up from $10 to $200. And I was kind of out of college and looking to move to a big city like New York or SF. And I wanted to work in like a fringe area of kind of technology. I didn't want to make a picture sharing app. And Bitcoin kind of piqued my interest. I had studied finance in college there. So I moved to New York. I didn't work in crypto per se, but I was paying attention to cryptocurrencies, and the technology consulting firm I had, they actually kind of anointed me the crypto guy. I kind of got there. Nobody knew what blockchain or cryptocurrencies was. And I was like, really? Like, you're a consulting firm for banks. That's what they were. And I was like, you should probably know about this. So that was like 2013, 2014. And summer 2014, I remember I saw the Ethereum, kind of project launch and everything from my phone there. And paid attention to that and followed that project really closely. And then I joined a fintech startup, and it was founded by a bunch of former guys that basically started a Bitcoin hedge fund in 2015. That bear market, and the Swiss franc pulled its peg or whatever, and their LPs pulled their funds, and so
Wow.
they kind of had a thing there. So they went and they started a fintech firm, but they were all like crypto traders at hearts. And so that was 2016 through, and then we kind of were paying attention to Ethereum as that space was kind of evolving, all the different token projects on top of Ethereum throughout 2017. And we would just be working and then like literally just getting into new projects and reading about space kind of side by side during the day. And so then around 2017, I was an engineer for them.
Wow.
And so what I did is I came in contact with a crypto project in New York called The Ocean. I met Ari there. He happened to live in a neighborhood over from me. And I ended up switching to crypto and then also switching to product management. And that's kind of been my role ever since in the crypto industry. So we brought the Ocean to market, and it was like a regulated decentralized exchange. It was a 0x layer. And we were based in New York, and we were kind of going after an institutional audience there. The funding environment in 2018 wasn't very attractive.
Yeah,
so
for sure.
it was kind of got to that point where it was like, they kind of ran out of runway there. So I joined Wire
Yep.
on SF. I was product manager for them, and we launched a bunch of different fiat to crypto, upgrades.
Wire is amazing. Yeah, it's
Yeah.
sort of a
So
pillar of the community.
the big launch there was we built a fiat to crypto ramp with
Yep.
one touch using Apple Pay. That was pretty exciting. So yeah, that, and then they kind of grew a little too fast. They had to downsize. So I've been surviving the bear market by my nails, I guess. But it actually turned out it was good timing for Ren. I had been following the community for a long time. I created like a tracker site back in the day, and I reached out to Michael and I said, hey, is there an opportunity, for a full-time, role at you guys? And it turned out it was perfect timing. It was the end of 2019, and they were gearing up. KSNet had launched, which was it is our kind of, it's like, it uses mainnet coins, but it's completely unaudited, and it's like almost like a production testnet. That was already live, and they were ready to kind of hit the ground running with their mainnet in the spring. And so it was kind of perfect timing for me to come on board as an integrations role, where I would kind of interface with all the projects that are interested in the space, and help them, get on board into Ren. And so here I am.
Yeah, I love this.
I guess I've seen a little bit of the industry.
No, it's great, right? And the lens through which you come at it, because first through things like institutional DEX, right, which is sort of very kind of early stage DeFi mindset, but also institutional and with kind of New York fintech experience, and then coming over to this coast doing kind of like, one of the premier on-ramps, and then obviously coming into, Ren. I think that's been an amazing lens through which you can kind of understand this industry. So, I guess to me, the Ren is sort of utterly famous for RenBTC, right? And I think, what's known about it is obviously that, it looks like as of today, there's about 17,100 RenBTC that have been locked, right? So it's there's quite a lot of value. So, if you look at kind of total value locked in USD, it's right around 213 million as of today, right? So, it's a pretty material sum, and I think it's a pretty meaningful, measurable percentage or sub percentage of all of Bitcoin, so, you can start to see this as kind of a big trend. So I guess first thing that I'd love to kind of talk about is sort of the demand, right? And I think, what I'd love to delve into after that is a little bit more detail on RenVM and a little bit more on the platform as a whole, right? But I think the first thing I'd love to understand from you is kind of how you see this kind of explosive growth and demand, right? Because I think that we're creeping up to $250 million locked, and we're creeping up to like, serious BTC onto ETH. So like, would love to get your perspective.
Yeah, it's crazy to see that volume also, with, I think RenBTC has seen a bunch of adoption in the projects on Ethereum, but surely not every project has adopted RenBTC.
Sure.
We haven't really, pursued it really heavily as collateral into some of the lending platforms just quite yet, because we're still in the early phases. But it's crazy to see that even with just a couple platforms, the demand there. I think that speaks to the demand for Bitcoin holders to earn yield on their Bitcoin. That's the killer application. I think if you look at Bitcoin, it is a savings technology at the end of the day. Not to be too controversial, but it's like, the pivot from electronic cash to pay for coffee to the collateral for the world. It seems like a valid use case. It seems like Bitcoin really deserves to be kind of this big, heavy gold alternative for the kind of the digital world, and have it to be non-sovereign. But what's really good is being able to use that collateral to earn yield on, to collateralize different debt products. It kind of Ethereum opens up a whole new design space for using Bitcoin in a peer-to-peer way. And I think you've seen through the volume that Bitcoiners want to park their Bitcoin on an Ethereum and earn extra yield on, and not have to worry about selling some of their Bitcoin.
Yeah, it's fantastic, right? Because, in a way, like, to me, what I see happening now is you are talking about yield, right? And that really is the kind of magic word for DeFi today, right? Which is yield is the king of everything, right? And what's happening now is that, what's this financial energy that people are storing is kind of now wanting to go to work, right? And the thing that's so interesting about this is that the work that it wants to do is expressed in kind of smart contracting, right? Which really means at the moment Ethereum, right? Because obviously when you look at that explosive kind of combination of financial power as well as programmability, that combination exists on the Ethereum side, right? And the thing that's so fascinating becomes, like, if you look at the history of BTC, you start to, you see all these kind of classic projects like Rootstock that kind of were trying to attempt to bring the programmability of the ETH side onto the BTC side. But BTC ultimately, by its nature, doesn't really think that way, right? So I think the thing
Yeah.
that's fascinating about what you're describing is you're describing the demand of taking the financial energy of Bitcoin and moving it to the place where all of the DeFi activity and programmability and yield kind of, live, right?
Yeah, for sure. I think Ethereum really has kind of two applications that are useful,
Yeah.
if I dare to say that.
No, go for it.
It's decentralized exchanges
Yep.
and it's peer-to-peer lending platforms.
Yep.
And with decentralized exchanges, like DYDX is an amazing central limit order books exchange, but also like there's a ton of innovation on the AMM pool side of things. Like it's something that you haven't really seen
Yep.
in the off-chain world, and it's really just shown to be super useful for everybody involved, and it's taken off. And so with centralized exchange, I would hope to see Bitcoin really take advantage of that. Like decentralized exchange around Bitcoin, like Bitcoin is never going to be able to be swapped peer to peer in an easy fashion. And so moving to Ethereum, you're able to get liquidity, even if it's just dollar liquidity. If we were able to, facilitate large liquid markets of between Bitcoin and USD on Ethereum, I think that moves Bitcoin, that moves everything forward, moves Ethereum forward and moves Bitcoin forward. It helps it kind of become, more liquid. And I think on the peer-to-peer lending side of things, all these platforms are collateralized because they're trustless, and there's some exciting stuff coming on the under collateralized area. But right now, you're going to need to post collateral, and why not post collateral on something that's literally designed to have the price appreciate? Yeah, like literally everything about Bitcoin is made to it's a savings technology where it kind of everything's made to the price is made to go up in a lot of ways. Not that's just my observation, opinion, no advice there. But and so as a collateral, it actually becomes a really good collateral.
It's fascinating the way you're describing, right? Because at some level, like if you look at the real world of finance, one of the places where collateral exists is almost like in the mortgage lending industry, where it's collateralized by the land itself, right? So it almost has that kind of vibe where it's like Bitcoin is almost like land, and then you look at like financial, equivalents or instruments or REITs or any other kind of like financialization of it, which happens more on the compute side, on the compute platform, right? So it's really, it's great to hear. So let me kind of pivot a little bit and talk. I'd love to talk about kind of clarification about the RenVM, right? Because if you think about obviously RenBridge is the key, right? So, just for the audience's sake, right? The RenBridge is really just a place where you can mint and burn BTC, BCH, and, ZEC on Ethereum, in the form of like ERC20s, right? So the assets basically are added to RenBridge, they're integrated into the RenVM, and then they basically, just like you would expect in a bridge, they become exchangeable in a transformed ERC20 format on the Ethereum blockchain, right? So that's kind of the what is it? Like what are we doing, right? And so the value coming from off-chain of Ethereum is coming into Ethereum, right? So, but I guess to me, I'm really interested in sort of the mechanics, right? Because when you think about the mechanics, like what's happening is that the RenVM becomes the custodian, right? And then the question becomes, how, so, but you back it with a 1-to-1 ratio all the time, right? So in terms of the reserve ratio and in terms of the, redeemability, you maintain like constant redeemability and 100% reserve ratio. Is that accurate?
Yep, that's correct. It might be helpful to kind of walk you through the flow of what's going on under the hood there.
Yes,
For
please.
RenBridge.
That's it. That's the meat.
Yeah, absolutely. So first, I'll just say, RenBridge it's an open source web front end that interfaces with RenVM. It's kind of analogous to Uniswap in a lot of ways. Uniswap is just kind of a front end to an Ethereum smart contract. For the RenBridge, it's a front end that interfaces with both RenVM and then an Ethereum smart contract. But how the flow works is users will first enter in like how much they want to deposit and where they want to send that deposit to, that BTC to on Ethereum. So let's say we're moving Bitcoin from Bitcoin to Ethereum. They're going to give us, hey, like we're on Ethereum to place this, and how much do you want to do that? On the front end side, what the front end will do is generate a deposit address that is unique for that deposit. So it's encoded in there as the destination address, the amount, and the smart contract that's going to be minting these funds for the user.
Yep.
And so that Bitcoin address so it's unique for that deposit, but then it's also under the control of RenVM. And this is all generated in your browser, so you don't have to trust anybody with this. But so it's kind of part of our protocol that you want to send funds using kind of this formula to RenVM, and then RenVM will return you back a signature that verifies that. So they generate that client side. The UI shows you a Bitcoin address. Then it says, send Bitcoin to this address. User sends Bitcoin to that address, and RenVM is a separate network from Bitcoin and Ethereum. And what it does is it sits in between there, and it observes both Bitcoin and Ethereum. And so RenVM will observe that funds sent to that address, that gateway address, and after 6 confirmations, anybody can bump RenVM, because it's a peer-to-peer network, and say, hey, verify this, and RenVM will conduct a secure multi-party computation that will return back a signature that verifies that, hey, RenVM is indeed received this Bitcoin. RenVM will return the signature to anybody who asks that. So then what you do is the front end, the RenVM site, will look at the signature. It has all your deposit details, and then it goes to the Ethereum blockchain. It goes to an Ethereum smart contract. And in that Ethereum smart contract, it accepts all your deposit parameters, and it accepts the signature. And in the smart contract, it will verify that both the parameters match the signature. Basically it verifies that. So RenVM gave you a signature, but it's a signature for a very specific thing, which is your unique deposit. So the contract will verify that that's true. If not, it'll stop, and then it'll mint RenBTC and then send it to the destination that it verified. I know that was a little technical, but that's pretty much the process. And so if you step away, what users are doing is they're giving RenVM custody of their funds. The network itself is giving custody of the funds, and then the network is authorizing a one-to-one representation of that on another place. So right now it's Ethereum. It can be Polkadot. It could be any smart contract platform, and the funds on here can be Bitcoin. They could be Zcash. They could be Bitcoin Cash. They could be any asset. And so users are kind of parking their funds into RenVM as they mint value there. And then the value is a single token on Ethereum called RenBTC that's completely fungible. So if you go out, let's say you mint RenBTC, then you go and you trade, you have a good trading day, and you end up doubling your RenBTC, then you will go to RenVM. And in order to get the funds out, any owner of RenBTC, which is the tokenized kind of representation of Bitcoin that's held in RenVM, they can just call the burn method on the smart contract on Ethereum. RenVM will observe that event, and the network itself, after 30 confirmations on Ethereum, will conduct a secure multi-party computational transaction that releases the Bitcoin to the destination that the user specified.
Got it. So tell me a little bit about this like MPC. So is it that the MPC is performed by dark nodes, or what? Tell me like what's the cryptography here?
Yeah, absolutely. So our team invented sort of a new way to do secure multi-party computation that's more resilient to nodes going on and off the network. And what secure multi-party computation is the concept of a bunch of parties getting together to conduct a calculation without one party knowing the data that they're conducting the computation on, or the calculation on. And so what we're doing is we're using SMPC to conduct a threshold signature on a private key that is collectively owned by multiple parties. So it's kind of like a multi-sig, but it's not a multi-sig on Bitcoin. It's a multi-sig. I don't want to call it a multi-sig, but basically it's like you're a multi-sig in the sense.
Yeah. It's kind of a near cousin of sort of like ZK and kind of homomorphic encryption technologies, right? It's sort of this notion of like you're working on stuff, but you don't actually know exactly what you're working on, but like everyone together has worked on it, and they get a shared result, right? So you're talking
Yep.
about kind of threshold key generation. So eventually, what happens is that the signing is done by the network as opposed to by any individual holder.
Yeah, exactly. It's analogous to the wrap Bitcoin model. The wrap Bitcoin model, actually, the high level, the architecture is the exact same. It's give your funds to an entity. That entity will verify that and mint you a one-to-one representation elsewhere. Except the goal of RenVM is that the entity is a decentralized network that nobody can control, and that it's always going to be doing one thing that you're guaranteed.
Yeah, which
Now, in
is
this fate,
that governs the kind of the ERC20 representations, right? So that governs the RenBTC in terms of the burning and the kind of certification of that, right? Effectively.
yep, yeah,
Yeah,
absolutely.
and the
Now,
release of Bitcoin back out the other side.
yep, absolutely. Now, we have done a phased rollout of our mainnet because basically there's a lot of new things that we're publishing here. So we have a brand new SMPC algorithm here. We have brand new code that's been written for this. And so what we've done is we've broken up our mainnet into three phases. So the first phase is a phase in which we have over 1,000 nodes on the network right now. What we've done is we've given there's multiple different things a node can do. So all the nodes do kind of basic peer-to-peer networking kind of facilitation. So like monitoring transactions and shuffling transactions along in the process, that's handled by everybody. But what we've done is we've taken 13 nodes and we've anointed these nodes that is called the gray core. And this gray core handles both consensus and execution, which is a fancy way of saying this is the core that actually holds custody and releases custody from the system. And during this phase zero, at the very beginning of the phase zero, our team controls all 13 of these nodes.
Yep.
And by the end of phase sub-zero, sorry, so the first phase, we will we'll give control of this gray core to a bunch of different projects in the space and kind of decentralize it away from the team's central control. But at the end of the day, the 13 nodes will control custody of the funds. Then, so that's kind of phase sub-zero. Phase zero is where pretty much the remainder of the decentralization is going to happen. So the first thing we're going to do is we're going to open up consensus and execution to all of the community nodes. And so we can have 1,000, 2,000, 3,000. We can have thousands of nodes run part of consensus and execution. The second thing we're going to do is we're going to break up the ownership of the community nodes into different shards. So basically, instead of controlling one master key, you'll be controlling multiple different keys that are equally split up into what we call shards. And we can handle up to two.
That's like a Shamir construct.
Yeah, it's a Shamir construct.
Okay, cool.
And so we can handle up to 200 nodes per shard. So we can have, say if you have 4,000 nodes, you can have 20 shards. And then, so second is we're going to open up our, and then finally, so we're going to open up community. We're going to break up the shards. And then when you release funds from the network, we're going to have, so anytime consensus and execution happens during this setup, all the community will calculate one signature, and then the gray core will still calculate another signature for funds in this space. And then finally, step 3 is that we're going to open up community governance. So this is there's a bunch of decisions that need to be made with RenVM. So for instance, we have mint fees, burn fees, and then continuous fees, which are collected to incentivize nodes to participate in the network. These are all right now managed by the team, but we want to open that up to community governance. There's also other things such as adding new coins, adding new setting even a per application fee. There's all sorts of creative things you can do with the network, and we want to open that up to community governance. So that's the final phase of the second. That's the final step in the second phase of RenVM. as mainnet rollout.
What's
And then after
the
that,
what's the time frame for, so I at the moment, like Gray Core is 13 nodes under the Ren team control, right? So but what's the time frame for I guess the phase after Sub-Zero?
yeah, sure. I think we don't have a particular like we don't have a good number for a time frame there.
Okay.
But what I will say, here are some of the factors that are at play. I think first is so those are kind of the three phases, and at the end of those phases, at the end of the basically the two phases, you'll be in phase one, which is basically everything has been decentralized. Um, the the major factors that are going to be at play, I think, are what we're doing is we've purposely kept the part of the code base that node's running closed source, because what we want to do is we've open sourced our SMPC algorithm and our paper and all the logic, but we actually closed sourced the implementation of that, because what we want to do is it's a brand new implementation of a brand new algorithm. What we want to do is we want to break that up into individual modules, audit each individual module, and then open source each individual module gradually over time. And so that process will heavily dictate, the progression from, say, phase Sub-Zero to the end of phase zero. I think also, I think figure out the right community governance. Those are kind of the two buckets. It's open sourcing and auditing the implementation of the dark nodes, but then it's also figuring out the right system that's sustainable and that's fits fits the right mold for the RenVM network, because you kind of only get one shot at governing a system, because once if you do it wrong, you kind of you can't go back in a lot of ways. And so I would say those are the two major factors there. But I mean, certainly our goal is within the next year or so to be fully decentralized.
Nice. Well,
and I
yeah.
would say, by the way, I don't want to have us commit to that
No, no.
be
I
a
mean,
year,
we're
but
just,
I would say that's a decent expectation. But
yeah, yeah. I mean,
that's my
obviously,
personal opinion.
I'm
But
not here to hold your feet to the fire, but people
sure.
want to know, and they want to kind of get it from the source. So it's great. It's very helpful to get your perspective on that and get your ideas around what the gating factors are. And I think it's not, it's logical, right? Because when you really think about decentralization, the projects go through a process, right? Obviously, there's some processes that are just kind of like, you know, super dynamic, right? Like if you look at like YFI, or you look at YAM, like these are kind of day zero decentralization, kind of like wild party type of things, and there's really interesting things that happen when you do that. There's other projects, like um, that have been a little bit more gradual with respect to kind of how decentralization occurs, and maybe rightly so. So, I think when you talk about 13 nodes, like the idea of decentralizing from there in terms of a governance structure around block production, like, yeah, I think EOS is the cautionary tale, and you can see that decentralization that's premature can cause you know essentially kind of staking level 51+% type constructs, right? So you can have really interesting governance faults. So I
Yeah,
don't
yeah.
certainly don't blame you. I think you're handling a material amount of other people's money at some level from a custody perspective, and it's nothing to just throw to the winds, right? I think this is 213 million USD value as of
Yep.
today.
Yeah, for sure. We've pretty much our philosophy, uh, everything we've done and are doing is to make the launch as safe as possible for user funds, because it's a unique challenge. We're not only launching a new network, but we're launching a new network that's handling custody of all different types of funds at all different types of times, and it's a brand new implementation of a brand new type of computation. And so that's just the nature of the beast. So we've done it. You could call it kind of progressive decentralization. It's nice to see that like names such as Andreessen Horowitz and Compound Finance have kind of taken this philosophy. So I don't think we're the only ones there, and we understand if it's going to rub you the wrong way. Like in these early stages, you are putting a lot of trust in the team,
Yeah.
and we're not going to like try to debate you on that. What we try to be is as transparent as possible, and we also, with our behavior, we haven't we haven't really aggressively, kind of behind the scenes, we haven't really aggressively pursued, compound finance, Aave, MakerDAO, whatever, because to be honest with you, it's not that we're not confident in our technology, but it's we are understanding that maybe they will come to us when they're ready, because we're in a phase which might not cater to every community's needs right away.
I appreciate that balanced perspective, right? Because, if you think about DeFi, like DeFi itself has to be pragmatic and heterogeneous. And I think one of the things that's the hallmark of modern DeFi is kind of pragmatism, right? Which is, to me, the thing that's so interesting is related to how people perceive and understand trust, right? Like, for example, if you look at something like a Chainlink, right? Like, people are kind of almost behaving as if Chainlink has solved the Oracle's problem, right? But that's not the case. Like, it isn't solved. Like, you can't move off-chain things on-chain and assume that you have a strong proof, right? Like, it doesn't work. It's not real, right? But I'm not complaining about it. I actually think it's really smart, because the thing that I think people need confidence in is they need confidence in, like, okay, well, can I drive my truck across this bridge? Right. And that's a specific case. It's not a general case. It's not like, oh, I need you to solve the Turing's halting problem, or Fermat's last theorem. It's like, no, I don't need that. Like, what I need to do is I need to do this. Can I trust this enough? Right. And so I think that
Absolutely.
What's happening in DeFi is that there's so much pragmatism, right? And that it's like, oh, well, if the person screws up on the Oracle, they're going to get slashed, so much. And then it means that the incentive of the provider is high enough. It's high enough for my application. So eyes open, I can use this because it's good enough for what I need to do, And so, like, to me, like, it's really all about intelligent and transparent mitigation of different kinds of risks. And, like, is there a counterparty risk? Yes, there is. It's custody. So what are you going to do about it right now? Eventually that becomes more solved from a technological perspective. But I think I'm with you. Like, I'm with you on the pragmatism, right? Because I think it's no longer this kind of purity test world where it's like, oh, are you fully decentralized? Then you shouldn't exist. It's like, what even is that? That I'm with you on that part there. And I like the way you're presenting yourself, because you're not trying to pretend. You're just saying, this is what it is. And, it's gonna, if you want to use it, like, check it out, which I think is super balanced and very fair.
Yeah, absolutely. And we kind of looked at it and we were like, actually full decentralization would be reckless in this case, right?
Yeah,
like
that's
that's
a very fair perspective. And, I think that it's good to see it as kind of a custodial activity. So how do you look at the governance token and deployment of, like, nodes, right? Because I think I understand that you need, I think it's 100K REN, to sort of effectively sort of stake into a dark node. And so, how do you see the kind of magnitude of the commitment towards node operation, and how do you see the kind of, I guess I would call it the business model of node operators, right? Because that's obviously, from the perspective of securing the network, it's important to have enough staking and enough kind of stake power. So how do you see that?
Yeah, I'd like to think our token economics, if you want to use that word, are about as clear cut as possible. It's a pretty simple concept there. So in terms of running a node, I'll just out of the way, the fixed cost to run a node, we've gotten it down to like $5 a month. So it's like, and truly anybody in the world can run this thing. It's not a huge heavy overhead. In terms of, so what you do, the way the economics of the network work is that 100,000 REN, and by the way, the REN token is a fixed supply. It's never going to be, never going to exceed 1 billion tokens in terms of supply.
Cool.
The RenVM bond, which is 100,000 REN, gives you the right to run a node on the network. Yep. And by running a node on the network, you will return a equal distribution of the fees that are collected when funds are minted or when funds are burned. And that's pretty much
how is the fee? How is the burn and mint fee? Like, is it adjustable? Like, what is the fee?
So the fee is 10 basis points on each side there, and those are two key parameters that we'd love to, that we will give over to community governance. That's something that we and that really. So the bond gives you the right to collect revenue from the RenVM, and you help facilitate the network, and then earn revenue through the utility from the utility of the network. Now you earn revenue through minting fees, burn fees, and then if it's turned on, a continuous fee for the fund's health in the system. Naturally, any rational person would subscribe this revenue, would use this revenue to discount the cash flows expected in the future to subscribe a value to the bond. And so as more funds are collected through the RenVM system, more revenue goes through the nodes. The nodes will appreciate in value, and therefore the economic security of the network would increase. That's kind of like the flywheel that kind of that the whole system's been designed on.
Makes
Essentially,
sense.
it's so that way as the network succeeds, the security succeeds, and as the network succeeds, the security increases. As the security increases, it caters to more volume. More volume comes through, success goes up, and then just round and round.
So are there mechanisms for effectively, like, I kind of hesitate to use the framing of like delegating stake, but that it's participating in node operation just from the perspective of a smaller holder, right? So let's say you had 10K Ren, right? And you don't have sufficient to be like a complete node yourself. Like, what are there mechanisms that enable people to pool or join or aggregate?
There's no mechanisms yet that we're thinking about all sorts of different ways to kind of enhance governance. But what I will say is right now, and for the foreseeable future, there is no native mechanism. Basically, 100,000 Ren is the bond. But it's pretty straightforward if you wanted to operate, say, maybe a more centralized service to cater towards smaller holders. And you could operate this centralized service in a decentralized way where you don't have custody of users' smaller bonds.
This feels as a decentralized set of kind of dark nodes. This feels like fairly more secure than like things like transaction validation in the classical sense, right? Because these are all kind of running secure MPC together, right? So that's the primary function, right? So to me, the thing that's really interesting about that is that, if your algorithm is anything close to reasonable, then like the benefits of being sort of a rogue node are really pretty limited, and it sounds like the slashing could be pretty serious, right? So like in the sense of like you're running like a quote unquote rogue node, like if it's NPC, like what are you gonna do, right? Like you're gonna throw out wrong things that people look at and be like, there's something busted about this node, let's start to apply whatever slashing or whatever isolation that you want.
Yeah, so. Absolutely. And from other competing offerings, we get a lot of flack for our security model because RenVM is collateralized by the Ren token.
Yeah.
And so, as the success of the network goes up, that collateral value will hopefully go up, and that raises security value of the network. Whereas other networks will kind of go above and beyond and collateralize with the additional asset.
But I think the thing that's interesting, becomes that like, it's interesting. I mean, I love the kind of stuff. I think I'll do a little bit of reading because it feels like this, right? Which is if you take a traditional kind of validator network around, delegated proof of stake or similar, right? You can begin to sort of double spend on the network as soon as you sort of commandeer enough validators, right? But the thing that's really interesting about this is that it's really performing the multi-party computation, right? And if your purpose is to generate a key that enables you to sort of mint and burn on either side of the bridge, like it just feels like how's that gonna work, right? It just feels like you're gonna generate a key that's not the key, like it doesn't benefit you that much to attack it that way.
So our security is we forked and improved a version of the Tendermint consensus algorithm. So theoretically, somebody with 1/3 of the Ren can kind of take control over the network. And if it was in one master pot, you'd only need 1/3 of the network to steal all the
funds. They could generate. So you could basically generate and then obtain the private key, right?
Yeah, you could. So for instance, like with the Gray Core, right?
Yes.
With the Gray Core, you could take over 5 nodes.
Yeah.
And then now you have more than 1/3 of the network.
Got
and then
it.
what you could do is you could derive the key and steal the funds. Right?
Got it. So the funds are not kind of the funds themselves are not like decentralized across a network of like wallets. Like there aren't like as many wallets as there are deposits. Like there's one wallet.
Yeah. So along the way, it'll get more and more secure. But here's where the sharding becomes very important. So by the end, if we have thousands of nodes and we have shards of 100 nodes each, you would have to when you corrupt a shard or take over a shard,
Yeah.
you would only be able to steal that shard's funds.
Yeah. That makes more sense. That makes way more sense.
Our protocol has the ability to shuffle shards around in like every 5 seconds, right? That's on top of having a warm up period. So when you register a node, you can only do it at a certain epoch, and a cooldown period, which is when you deregister, it cools down for 3 months. So what I'm trying to say here is that although on a whiteboard it's theoretically possible to, when we're in that final phase, if on a whiteboard you say, hey, look, in theory, somebody could corrupt every shard. I mean, basically it would be a lot easier to corrupt one shard than all the shards.
Yeah. I'm happy about this. I'm happy about this because the result of a successful 51% attack on the Bitcoin network is the ability to double spend out of a wallet that you already control, right? So in some sense, like the implicit decentralization of the custody is actually a form of decentralization that protects the network from just a single massive hack, right? Like that's the thing that I think people are scared about, especially in the context of like centralized exchange or this kind of, and obviously even a centralized exchange is starting to use decentralization in the sense when you look at the structure of hot and cold wallets, you see there are lots of them, right? So, a traditional centralized exchange, even in cold storage, has like lots and lots and lots of cold storage that it kind of segments and fragments in order to kind of like optimize their custody pattern. So, and obviously they're using providers like Fireblocks and other kinds of like mechanisms that provide this sort of centralized, decentralized mechanism. But long story short is, I really like where this game is going. I think that what you're describing makes a ton of sense. And I think in some ways it represents a really important killer application because as you start to see these kinds of like parachain kind of protocols that handle things like performance optimization, ultimately the thing that becomes probably the most interesting in terms of the end game is actually transferring value, right? Because people want to transfer data, they want to transfer computation, they want to transfer a whole bunch of things. But I think transferring value becomes sort of the root. It becomes kind of the most interesting part of cross-chain.
Yeah, I see what we're doing at the end of the day of just we're just creating markets on the internet that are native to the internet that are more peer-to-peer and permissionless and things. But at the end of the day, we're just creating markets and markets for different things, different types of markets, different types of structured markets. And so right now we're putting digital gold into a kind of new version of Wall Street on Ethereum. But to be honest with you, there's plenty of other networks out there that can either compete with Ethereum when it comes to performance and fees. Because right now, it costs $10 to, swap $50 on Uniswap, and it's like, well, what's the point? I think that's interesting. I think assets like Filecoin, so assets that live on their own network, off of, I think any asset that's building on its own custom tailored, single use case network will find value in a basic peer-to-peer financial network. So for Filecoin, it's going to be pretty key for people on Filecoin to borrow against their Filecoin after they're running on the network. So anyways, it's part of these interesting crypto economic systems that are being built on their own separate networks can take advantage of the peer-to-peer lending on Akawa or on Ethereum. So it's gonna be I think pretty cool. And to be honest with you, we've been promised interoperability for a long time in the crypto space, but it's never really been a thing. Like we've never gotten to a place where users are just going to a website and moving things across everywhere. So
yeah, I like that. I like that. So one of the things that I wanted to just kind of inquire about is that, you're doing sort of a BTC-backed yield dollar with Uma, right? So I had
Yeah.
Clayton from Uma on my show, and we're definitely fans of what they've been able to do. But maybe I'd love to hear a little bit about how you see this yield dollar.
Yeah, I think the steel dollar is really awesome, and I think it provides a ton of utility. What it does is it allows you to, I think, for the first time, really borrow dollars against your Bitcoin. I mean, Cream Finance adopted RenBTC, but I think within one transaction, you have to kind of Cream Finance, you have to supply and then you have to borrow. But with UMA, in one transaction, you can use your Bitcoin to borrow dollars against, and this has a ton of use cases. So, for instance, you could build not for retail, but kind of a more like BlockFi use case where it's like, look, I have Bitcoin. I want to have liquidity on my Bitcoin because my car broke down, and you're able to kind of borrow dollars against that and pay, not have to incur a tax gain. However, on the capital markets side, you're able to. It's just another place to lend, to borrow Bitcoin. But what's really cool about it is it's a futures contract. So what it is, it's every month. So you're going to put down Bitcoin. You're going to get back a token that represents $1 worth of that Bitcoin at the end of the month. You can then go and sell that on the open market, and the market's going to give you a slight discount to that, which will kind of go up and up and up until it hits par towards the end of the month. And what's cool is that discount that you're selling is basically a fixed term loan. And so, so you're able to borrow USD against your Bitcoin. You're able to do this for a fixed rate. And that by doing this in the capital market space, you can do some more sophisticated arbitrage opportunities in an easier way. So, for instance, if you know what you're borrowing against in a fixed rate, you can conduct certain arbitrage opportunities in an easy way.
That's nice. I mean, it feels like a pretty atomic building block, and very, very useful from a platform perspective, right? It's because you can really see developers financializing on top and basically doing almost anything. So I think it's an interesting development. Well, good. I guess the other thing is I think you alluded to it earlier. I think you were talking about obviously big projects, Comp and Maker, Aave, these types of things. Any particular comments? You said that you weren't pursuing them aggressively at this juncture, but how do you see the evolution of Ren towards these kind of base protocol engagements?
Yeah, no, I think just we have good relationships with those teams and stuff.
Makes sense.
But yeah, we are just kind of like, hey, come to us when you're ready, type thing. I think for us, it's all about. So we are, in terms of what's kind of on the horizon here. I think we'll have RenBTC kind of make its way into more and more platforms as we become more mature on our end, and we kind of show progress in our own way. I think we're really excited to add new source chains and new destination chains. I think we're really excited about Akala and Polkadot. We're really excited about Filecoin.
Yeah, that's great.
Dogecoin, has its own.
That's exciting. Those are great. Excitement. Absolutely.
So like I think things will get real funky. I think because decentralized applications are really only Ethereum right now.
I think Ren Doge is gonna be like the ultimate kind of sushi farming, like meme coin.
Yeah.
Like they're gonna come over, right? That crowd is gonna bring a lot of interest in this kind of crazy. You're already working with Cream, like I think all the degen like farmers own Doge. it's sort of
I'm sure they do.
It's a natural it's a match made in heaven. Well, just as kind of a final note, like what's your take on like WBTC? Like, obviously they've locked a pretty good amount of value as well. So I just want to kind of get your perspective on the role in the ecosystem and how you see WBTC.
So we love WBTC. We kind of consider them kind of collaborator in a lot of ways. We built something called the Wrap Bitcoin Cafe, and what it does is it lets users literally go through RenVM and then atomically on the other end get at Bitcoin. Because I think we understand, like, the safest place for Bitcoin is on the Bitcoin chain. Okay.
Yeah.
And if you're on Ethereum, there's a bunch of different opportunities that both have like different trade-offs and different security properties. I think for if you're going to hold, let's say you're an investor and you're handling other people's money, and you're going to do yield farming on compound, it'd be not a bad idea to use Red Bitcoin, because maybe you want those extra guarantees, you want that extra insurance on top of that. For other people, it might not matter, and what might matter is a lower cost of entry and exit and a faster withdrawal time, in which case RenBTC is probably a really good option for you.
Yeah, and I think at the end of the day, these will probably end up being strongly gated by the integrations and integration partners, right? I think that there aren't that many people that are so obsessively kind of price sensitive on things like yields that they it's going to be related to integration and developer, ease of use.
I think Wrap Bitcoin is USDC, where DAI is like maybe more like RenBTC, not one-to-one representation, but like you get my point, like Absolutely. There's a time and place for each kind of variant. So.
Wonderful. No, I think it's a great perspective. Well, I
would like to highlight, you could build an application for RenVM that literally you go through RenVM and you can get any variant for like with a better user experience than that variant's native user experience, because you set up a kind of a curve pool and you're able to swap for it atomically.
Yeah. That's beautiful.
So yeah.
That's beautiful. Why not? And I feel like that kind of widget is going to be useful to handle integrations across different partnership models, right? So you can bridge from so at some level, like you can really just say BTC in here, and then your choice of whatever intermediary instrument. So I think it all makes sense. Any kind of words of wisdom in terms of the future? How do you see the future of RenBTC, and how do you see kind of, obviously you already mentioned kind of new instruments like Filecoin, you mentioned new instruments like Doge, but I think looking even beyond that into the kind of far horizon, like what's your perspective on the grand plan, if I dare say?
I would say it's all about decentralization and autonomy. Like right now, like the Ren team is actually the bottleneck when it comes to adding all these new chains and stuff. Like I think we'll know we've made it when we're in phase one, where it's like every single node is participating in consensus and execution. Fees are being set algorithmically using a formula that's been voted on by governance. And new chains are being voted on every day. I mean, I think that right there would be a dream for us. Our number one goal now, since being live and since seeing some decent traction, is audit and open source everything that we have, decentralize everything, and then put a rock solid governance behind that, and then get to the end of that line. I think that's our number one goal.
That's fantastic. Well, just really wanted to thank you for coming on the MikoBits show. Lots of really rich, fascinating information about RenVM and the whole protocol. So, really thank you so much for spending time with us.
Yeah, no problem. Thanks for having me.
Okay, take care.